Hey traders, welcome back for the next episode of my trading journal. This is the recap of week 47, actually doing it at the end of week 47, so please forgive the last video. But hey, I'm back on top of my journaling, which is the purpose of this vlog. So let's get into it. So over the next week, this last week rather, should I say, the SPY has had a very nice comeback. Let's see if we can just nip this back. So I think last Friday, this is the position we were on. In the last video, we discussed it. It's a bit of a sell-off, and with that, the usual Wall Street Journal hype was going about, oh, bear market's coming, this is the sell-off, I've been telling you for ages, blah, blah, blah. But these are pretty healthy. We need them. We need the pullbacks. It allows you to get into things that are cheaper when there's no reason for them to be cheaper other than a bit of market jitters. And yeah, what's this? 684 down to 653. We go back into the last decent sized one. It's not even close. But I did say, when you touch the 100-day, it could have gone down to test the 200. Happily, it went the other way, and we had a week of green, and we're back close to all-time highs, not far off the actual all-time high of 28th of October. So like I said, SPY 500 top stocks. It reacts because the stocks are going up or down. So you see green days in the large market. Most of my positions, because I'm traded in the SP 500 companies as a rule. Mostly, not all. For some of you point out some ones that I have that aren't. We actually had a really good green week, as you can see on the columns here for the change and the percentage change. So let's get into what actually happened with my positions. So you'll remember Barrick Mining. I jumped in with the thesis that bit of jitters in the market, people head to gold when that happens as a bit of a hedge, or precious metals. Barrick Mining is a company that produces these precious metals, so its price fluctuates with the price of those commodities, and I was right in this case. Look at that, boom. Wish I'd bought the stock rather than just sold the cash secured put, but I have a long-term holding account, and this is just my income account. So very happy that it played out as I thought it would on this one. I hit my 60% take profit on Monday. Where's Monday? Friday, Wednesday. Hold on, where are we? Friday, Thursday, Wednesday. Yeah, back here. This big green bar here. Blew through. I managed to look at the futures market and saw that there were things were opening higher, so I moved my take profit from a normal 50% to my 60%, and sure enough, pretty soon after market open, this one closed itself out for a 50% profit, over 50% profit on the trade actually. I think I sold it for 63 cents, bought it back for just under 30, almost a bang on 1% in 7 days, which is an annual ROI of 52%. Take that any day of the week. So in and out in 7 days for B, which is lovely. UPST. So what did we do on UPST? It looks a little bit complicated, all these lines, but actually before we get to that, the next trade I made, it's not in the right order here, was a PayPal trade. I sold, so when I saw at the end of the last video, I was talking about these railroads, and this large green up one could have signaled quite a big jump on the Monday. Didn't happen. See, we got this little tiny red candle, much of a nothingness here. So I entered in a covered call at the 62 level, which at the time was paying me, I think it was 26 cents for a very, very low delta. And yep, I went with that. Usually about one standard deviation away I go for cover calls depending on the premium on the Monday, and that was fine. So the next trade I made was UPST. So if you remember, I had what are the calls? What did I have? I had the 41.5 call from the previous Friday, which was here, 41.5, and you can see what UPS has done. So on the Tuesday, when it touched my 41.5, that's my cue to roll up and out. Oh, I don't like going far out in time with covered calls if I can, because then I'll end up in the situation I'm in with HPE and Soxel. So I'm learning the lessons from that. So what I did was I bought that back for, I think it was $1.06 it cost me to buy back at the time. And then I immediately sold another call. I sold the 5th of December 43 call at the time it was. Yep, right there. And for that, I got 131. So nice little profit there of, what's that, 24, 25 cents. Fine, I thought I'll stick with that. And then, of course, UPS continued to jump up crazily, which is what I want. I need it to get back to 56. So it's all about managing the covered calls and keeping them as close as I can. So when it started to blow past that one as well, we needed to take action. So we were at 43 on Thursday, I think, Wednesday. And it was getting close. In fact, if I can get the cursor on there, the high was 43.20 on Wednesday. We closed at 42.06, so we dipped back below again. But I thought, as I've said before, this company UPST is extremely high volatility. It's a new fintech company, and it's trading at something ridiculous. 184 price to earnings ratio. So it moves like crazy, and this is 10% of my account I'm playing with on this one, less actually. But it's ridiculous volatility, which is giving me huge premiums, which makes it so much easy to roll. So that's fine. So what I ended up doing was I could have rolled it out, up and out again, but I did not want to roll out much further than a month at all. So what I ended up doing was buying back that covered call, and I ended up buying it back for 142 because I was still just below my strike on the 26th of November, on the Wednesday, as it dipped back down below, and I immediately sold another cover call at the 50 level right up here. Now, of course, I had to do that for a debit, so I sold that for 104, which is a debit of 38 cents. But then I was up at the 50 and out to December 26th. So that's 4 weeks. Now, I don't like selling for a debit. I mean, of course, in this situation, it's fine. 38 cents to go up, $7. That's a really good deal. I would have done that anyway. But I really like this support level here, right down at the 33. 34 level, sorry. I sold a put out to the 26th of December on exactly the same time, which I got paid 63 cents for because it's way low delta, but of course that covered the debit of the call roll and then some. So I got for that selling the put, buying back the call, selling another put at 50 further out. I ended up with a nice profit, and I raised my call strike price by $7 which, per share, that's $700, right up effectively to my cost basis. So if, UPST continues to fire up like this, I will, and I'm called away, I'm at least break even on this trade, which of course is not where I want to be. I will continue to roll the call up if the 50 gets challenged back close to the 56 mark. But if UPS turns around and plummets down through that new put of 34, I will attempt to roll it out and down, which you can do quite well with UPST given its volatility. But you know what? If I don't, I'll have 100 shares at 34 and 100 shares at 56, which drops my average cost base considerably down into the 40s area. Something this volatile is not one you want to be averaging down a lot on, so I wouldn't do that again, but I've got spare cash in the portfolio to have a play with this one, so that's fine. I'm not currently thinking that's the likely scenario. It's more likely that I'll have to continue to roll the call up, which is definitely a good scenario. What will happen Monday? Who knows? I mean, this is clearly an area of previous support and resistance, which is exactly where it stopped on Friday, the 45 mark. Are we going to be able to break through that on Monday? Or are we going to have a little play around at this level for a while? Who knows? We'll see. I've effectively got a strangle on with a with a put down there and a call up there. But yeah, we'll see what happens. So a little bit more complicated with UPST. After that, we go back to PayPal because, as I said before, I was at the was it the 60? What did I say was that? I was at the 62 level, wasn't I? So PayPal continued to rise last week as well, which again, brilliant, exactly what we want. And my 62 call was looking like it was going to be threatened. So on Wednesday as well, just on where it was being touched here, I decided to roll PayPal out further and up. So we're now at 64 for the 5th of December, so the end of this week. And if we get challenged again this week, I'll roll PayPal up again. This is exactly what I want to happen with my covered calls. Continue to bring in premium as you follow the stock up. I've got a long way to go to get back to 74, sorry. So, yeah, but it was a quick drop. It might be a quick rise again. We'll see. But the cost basis is coming down every trade. The plan with PayPal, as with all my covered calls, is not to let them go until they get back to where we were assigned. Now, I don't do this blindly. If something fundamentally changes with my assessment of the company, I will get out for a loss if I need to. But, PayPal, I think it's a brilliant company. I think it'll get back up to these areas and beyond. That price to earnings ratio of 12 for PayPal, it's just blatantly on sale right now. So yeah, I am more than happy to keep rolling these covered calls up as PayPal climbs up. There is no reason for it to be this low, in my humble opinion. It's almost one I'd sell more puts on just to get assigned at this level, actually. I may think about that next week. We'll see. So that was PayPal. Let's go back up. What was my next trades after UPST? IBKR last week. So nice recovery on IBKR. Last Friday we were down here, just bouncing off the 200-day. Good 4 solid days up the way, and we're getting close to back close to my strike price. So with this one, I took the opportunity to, on Wednesday as well, roll out my my put to the 19th of December was originally the 5th, so it was due to expire this week, which, you know, it might have been the wrong call for me. It could easily be above this on Friday, but I was able to get a really nice 91 cent premium for doing that for an extra couple of weeks. So, you know, I'm still meeting my return targets for these. So, yeah, I'll hold on to IBK a bit more, take in a bit more premium, and wait for it to recover, which it looks like it is doing. And dividend going X to 0.8 cents. Yeah, it's nothing. It's not really going to affect much there. So that was my next trade. That was a nice 91 cent profit for that roll. Happy with that one. And then the next trade I did was NVO. So here we go. Can I zoom in a bit? Let's see. You can see. So Friday, last video, we ended here with that huge volatility I was talking about, and sure enough, big drop on open on the Monday. That was because of that Alzheimer drug trial that didn't go well in its last trial, and we got a good drop. But then it's since come back, and we're heading back north again. So volatility dropped massively, and I sold a 52 level call in a previous one. I haven't updated this chart here actually. Let's do that now. So this one expired, the 53 one. I'm now at 52, expiring on the 5th of December this week. So I'll be quite happy for NVO to continue its climb back. Like you see, it's just on Friday it closed over the 20-week moving average, which it has not done since we started this drop. Could that indicate a nice uptrend coming? Who knows? But plan with NVO, same with the other covered calls. Keep selling the weeklies, keep rolling them up and out, and ride it back up to our original assignment prices. What is NVO trading at? Yeah, look at this, 14. Price to earnings ratio of 14. That is unbelievably on sale for a huge pharma company. So yeah, still got absolute faith in NVO for it coming back to 56 and beyond. Just might take a while. Alright, so we've talked about B, UPST, NVO. Where's my game trade at? Look at that. Look at that. Back above the strike. Got earnings on the 9th. I'll be out before then. On Friday, this Friday coming, hopefully. Let's just hope GameStop stays above my strike. So yeah, I mean, this is a good example of why I sell monthlies, because you get good premium, you don't have to babysit them that much, and it gives time for drops and recoveries. You know, a week from now I might be crying again if it's back down here, but yeah, we've got a nice recovery here. Let's see what happens on Monday. SoFi, so if you remember last week, SoFi was 19 cents above my strike here on this candle on the Friday. 4 good days, and we I'm saying 4 days for last week, but you remember Thanksgiving, the market was closed on Thursday, and Friday was a short trading day. So it was a four trading day week, well, 3.5 I guess. But yeah, we're back way off my strike here. 2 weeks to go, 12 days. We'll see what happens. If I can get 90% profit on this next week, I might just close it. Oh, and NU is just awesome at the moment. So I've always said I think this is going to 20 before I would even consider closing my leap, which is way down here at 8. Look at lovely trend. So yeah, all-time high for NU, continues to go that way. My Leap is in huge, I think it's in 50% profit right now actually, but I have no intention of cashing that in yet. Yeah, like I keep saying, 20 is my goal. I think it'll take a long time to get there. Well, it jumps and falls and jumps and falls, and that's fine. So I think it'll be a while. I mean, I've got well over a year left on that Leap. So yeah, this is awesome. This is one I should move to my long-term hold, rather than the income one. But there you go, that's where it is. And HPE and Soxal have recovered somewhat. Soxal's now back above my cost basis. HPE, sorry, is now back above my cost basis. And Soxal's had a nice big jump after playing around with its 200-day moving average back up into the 40s. Nothing I intend on doing with these two trades until we're in the new year. But I do want them going up the way, not down the way if I can. Yep. So that is where we are at the end of week 47. Should have changed the title there. There you go. So we'll see what happens next week. We're at the high we were before the drop last time. Are we going to breach the all-time high and keep going for the end of the year? Who knows? I don't have any trades I'm intending to make next week other than rolling the covered calls, unless I can get out of SoFi and Game. I'll be out of hopefully next week, so that'll free up some capital to look for new trades, but we'll see what happens. Right, that's all I have. So at the end of week 47, that's where we are. It's also the end of November. So November was an earnings month, so I haven't met my 2% target, but I think I was on 1.6% overall with lots of trades I couldn't take because of earnings. So I'm happy with that. Some months you get more than 2%, some months you get less. This was a less. So we'll see what happens in December. All right. Stay healthy as always and stay profitable. I'll catch you in the next one.